Welcome back. Some say you need a crystal ball to work out what the market will do next. But my next two guests are a little more technical. We've spoken about the 200-day moving average on this program before, and tonight we're focusing on a different phenomenon said to predict the future of market performance, and that is the head and shoulders pattern, and we've been hearing about it for weeks. Joining me to explain it what it's all about are two top-notch chartists, Julia Lee from Bell Direct and Lance Lay, the Chief Investment Advisor to Ace Capital, a fund for sophisticated Japanese investors. And are there any other kind, Lance? Sophisticated Japanese investors.
That's right.
Thanks for joining us, guys. Look, I think a lot of people have been reading over the last 4 or 5 weeks, head and shoulders patterns. I heard you talk with Richard one afternoon about, and a lot of people said, come to me and said, well, what in the hell is it? Now, before we do that, I also want to know, where do you come from, Julie? Like, once upon a time, all us money people were sitting around, all of a sudden you came on with Hub Financial everywhere, and now you're Bell Direct. What's the history of Julia Lee?
Sure. Well, I've been in the markets now for about 10 years, and about 9 of that has been teaching investors about the share market, so from about 2001. So I guess it's been a pretty steep learning curve. I remember doing a seminar the exact around the time of the September 11 incident, and I remember being in Lura at that time, and then having to talk to investors the next day, and it's been a pretty wild ride. And I guess along with it, I've learned how to do technical analysis, fundamental analysis, options trading, and yeah, it's been fantastic. Yeah,
in a sense, there aren't many women in the finance world. You know, I'm always looking, I always say to my producer, I want Sheila's on this program, they'll call me sexist. But it's really good to have you on the program. And Lance, of course, is another mate of mine. And Lance is a guy who used the charts to see that the market was going to go down. He was a bear well before anybody else. And so I want to have you on the program to talk about this head and shoulders pattern, because a lot of people were saying that is a good, or is a reliable sign usually that the market's going to go down. So Lance, you've got the chart of the head and shoulders pattern, haven't you?
Right.
So why don't we bring that first so the viewers can see what... So this one here, is this head and shoulders normal, or is this an unusual head and shoulders one, Lance?
It's an inverse head and shoulders, Peter.
Okay.
And just as a normal head and shoulders would show a market top, what we've got now is an upside down head and shoulders, which basically shows that we've got a market bottom forming.
Okay, so don't worry about the words. The words are unimportant tonight, ladies and gentlemen watching this. It's the shapes. And so if you can look at what that line, the centre line runs across, either side you've got, in a sense, 2 shoulders, and right in the middle where it dips right down, that's like a sunken head, isn't it?
That's right.
Yeah, so if you flip it around, then you have a head in its normal position. And that's what it was like 3 or 4 weeks ago, wasn't it? So that's now, but Lance, you're saying, is this what we're seeing now on the market?
Correct.
Okay.
And in fact, the chart that I've brought up there is the S&P 500, it's the US market. Yeah. I mean, a head and shoulders is basically like what you would get in a photo of your passport, where you've got the shoulder and then your head.
Good point. Yep.
So this one is just flipped upside down.
Yeah. Now, can I hold you for a second? So, if the cliches and the generalities we got was head and shoulders patterns will lead to the market going down, therefore, by the law of opposites, if this is an inverse head and shoulders, the market's pointing to going up.
Correct. Now,
someone like you, you've been a bit bearish, or very bearish at first. So you're just showing how objective you are. Are you now going to tell us that you think, at least for a while, the market's got some upside?
That's right, and on the chart there you can see that I've got a target level of 1,253.
Now, so that's for the S&P 500, that's the US index,
that's it.
And we're around 1,000, which I made the point today. So you've got another 250 on the high side?
So there's about another 25% to go.
Yeah.
And I suppose that's where technicals take out the emotion of things. I mean, because I've been on the bear side for a while, and now it looks like, well, we're going to get a bit of a run up.
Can I hold you for a second? I know you want to throw something else in there, but you also, last time you came, you said that you needed to see the 200-day moving average cross over the trend line a few more times before you thought. Did you get enough crossings before this upswing was happening?
Well, I've actually got that other chart on there.
Okay, let's just see that chart is readable. Okay.
Not that one.
No, that one.
Yeah, that's the one.
Okay, that's the one.
Now it's a little bit hard to see there, but that was the chart I brought last time.
Yep.
And the 200-day moving average is sitting at 870.
And that's a faint red line in there, Lance. Yeah, we hardly see.
My apologies.
It's okay, but in a sense, you're saying it has had a number of crossings now.
Well, it hasn't actually crossed that many times. But the important thing is not so much the crossing, but whether it's pointing up.
Ah, yeah. Okay.
And so we've got it at flat now at 870.
Yeah.
So it's not falling anymore.
Okay. Very important point. So you've got the inverse head and shoulders pattern pointing up. You've got the flattening up as well. Okay, now we'll hold it there and we'll come back for your what might happen down the track. So I know you're going to have a bearish story somewhere. Now, Julia, what are your charts going to show us?
Now, I think the head and shoulders patterns are significant and the inverse head and shoulders are significant as well, but more as a beacon to a warning sign on the market. So be aware this may be happening, with the big word being may, because technical analysis isn't an exact science. And while there's a head and shoulders formation, the market's also risen 14% in the last 2 weeks. Now that's a huge rise, and we can't sustain that type of momentum indefinitely. So if we have a look at the market, there's some key things happening on the markets at the moment, and I have brought some charts.
Okay, your charts are going to show us that. Okay, let's just see if we can drag out some.
So if we start off with the Australian share market first, these are a few examples of head and shoulders with Westpac, and you can see we've had inverse head and shoulders patterns twice, and you can see the green arrows, and they're significant because from the head down to the neckline, usually if that's broken, the neckline is broken, what you see is a move which is equivalent to that green arrow. So those two green arrows are exactly the same distance. Now, the same thing with the blue arrows in the second inverse head and shoulders patterns as well. But really what I want to point out is what's happening on the Australian market. And if we ring up the Australian market...
Before you, why did you select Westpac? Do you think it was a good representative company for the stock market?
I brought up Westpac because this is one that we're quite familiar with, and you've seen two inverse head and shoulders patterns which are almost textbook versions in the last year. But if we have a look at the Australian share market, the XJO, which is the ASX 200 index, this is what it looks like. And I've just drawn a line at that resistance point of 4,300.
Now, where did we finish today? Can you remember, Julia?
Just above 4,300. So getting pretty close to that 43.50 mark. But if you have a look at that 43.50 mark and go back to the first quarter of the chart, you can see 3 times we've bounced off that line, and it's acted like a ceiling for the Australian share market in the past year. Now you can see where we're at the end of that chart, where we're at the moment, and we've once again come back to the line. So the big test is going to be, are we going to be able to break that resistance point or that ceiling for the market this time round? And I guess that's why the next few sessions on the Aussie share market, the US share market, are quite significant, because this is happening on the US market as well.
Let me play devil's advocate for the people at home. If we go through it once, is that going to prove the case, or do we have to go through a few times?
Well, it depends. It depends on the strength of the move. If we zoom straight past it, we've broken it, that will hold. It becomes a new floor, so it will support the market going forward. But if we see a small break of it, then, you want to see a more convincing break of it. So a lot of it's psychological as well as technical analysis.
So people at home, 4350 is the big watch.